Hello, and welcome to the November Dairy Market Update. New restrictions on movements due to rising coronavirus infections and continued delays in agreeing our future relationship with the EU has increased uncertainties around how markets will develop in the coming months. As a dairy market analyst within AHDB, it's my job to look at how these events could impact the markets. And so in this presentation, I aim to highlight the risks they present to dairy markets to help you understand the challenges farm businesses could be dealing with in the coming year. When we look at the current financial situation for dairy farms, margins are tight for the majority. In the 12 months to June, the average milk price has been around 28 pence per litre. Looking at the average will hide a wide range of prices, but for the majority, 28 pence per litre would be sufficient to cover cash costs, although it doesn't provide any room for investment. However, how we end up leaving the EU, as well as how the extent to which COVID continues to disrupt our daily lives, will be crucial in how markets perform. Previous work looking at the impact of Brexit on farm business income showed dairy farm incomes could fall by around 20 to 24% relative to 2017 levels. The biggest impact came from higher fixed costs, particularly labour, although this was partially offset by higher output prices. It's important to note that the higher prices are relative to global prices and result from added costs of trade that Brexit will bring. The question then is, how are markets likely to develop as we go into 2021, and which direction will prices move? In terms of supply, current forecasts show growth in global supplies of around 1%, which in a typical year would be in line with demand. In Great Britain, our latest forecast predicts lower production this milk year compared to the year before, mainly as a result of reductions which occurred over the spring peak. The demand outlook, on the other hand, is much less clear. How we end up trading with the EU will have a significant impact on pricing. Even if a deal is reached, we expect trade flows to be impacted as the cost of trade will increase. For dairy, prices are expected to go up overall, although this will vary by product as supply chains adapt to new ways of sourcing inputs or selling products. Any impact on processing returns arising from higher trading costs or uncertainty could very likely limit buyers' ability to raise farm gate prices, and in some cases put some downward pressure on prices if they're unable to divert products to new markets. This is also a very real risk to the organic sector in terms of market access. While discussions are currently taking place with our key export markets in an attempt to agree equivalents, there is a large risk to the sector if organic status isn't recognised, and they cannot secure the associated premiums. However, there are some opportunities associated with Brexit we shouldn't overlook in terms of import displacement, which could add some support to markets due to increased demand for milk. The continued presence of coronavirus means how and when the hospitality industry returns to more normal trading conditions remains up in the air. And this will be crucial in determining the path prices take in the coming months. While higher retail demand has offset the most of the food service loss, at least for dairy, the move in sales from out-of-home retail could have a negative impact on processor earnings. Margins on retail sales are typically lower than those achieved in the hospitality sector, and this could impact the price processors pay for milk. Tighter restrictions on social mixing recently put in place will further reduce hospitality demand. And compounding this will be the absence of normal holiday boost to demand for dairy, which will particularly hit those businesses supplying seasonal products like fresh cream and specialty cheeses, such as Stilton. Finally, there will be an impact on demand from the slowdown in economic growth, which will impact both domestic and export sales. In summary, demand will be the fundamental factor determining price direction, so it will be crucial to monitor how Brexit plays out and, perhaps more importantly, how demand continues to be affected by coronavirus restrictions. You can keep up with the latest market developments by visiting our website or with our weekly newsletter. If you don't already receive this, sign up through the Keep in Touch section of the AHDB website.